So let's talk about something that's got Wall Street scratching its head. We're looking at a company that missed its targets by a pretty wide margin. But then its stock, well, it just went to the moon. We are talking about the wild case of Rezolve AI. Over the next few minutes, we're going to break down the fierce battle being waged over the stock. We'll look at why some folks are betting big on it while others are screaming that a crash is coming. And hey, just a quick heads up, this is all for informational purposes, not investment advice. Okay? Let's get into it. All right, so let's start with the central puzzle, the thing that really caught everyone's attention and made us go, huh? It all comes down to this one simple question. How on earth can a company report a pretty major miss on its revenue forecast and yet see its stock price absolutely take off? I mean, that's the paradox right there. On one side, you have the reality. Rezolve AI's Q2 earnings for 2025 came in 27.7% below what they'd forecasted. Ouch. But then on the other side, the market reacted with a massive 21.48% jump in pre-market trading. It's like we're watching two completely different movies at the same time. Okay, so to make sense of that crazy stock jump, you first have to understand the powerful story the company is telling everyone. This is what we call the bull case. See, the bulls, they're looking at the bigger picture. Yeah, the quarter was a miss, but look at this. The company's revenue for the first half of 2025 shot up an incredible 426% compared to the year before. That's the kind of insane hypergrowth that gets investors really excited and willing to forgive a little stumble. And they are not pumping the brakes. Rezolve just dramatically raised its forecast, now expecting $150 million in annual recurring revenue for 2025. And they're even eyeing $500 million for 2026. That is some serious confidence from the leadership team, basically telling the market, the engine is just warming up. And look, this isn't just wishful thinking. They've got some serious muscle to back it up. We're talking strategic partnerships with giants like Microsoft and Google. They've grown their list of big-name enterprise customers to over 100. They're sitting on a very comfortable pile of cash, $230 million to be exact. And get this, a gross profit margin of over 95%. That's just wow. And here's the vision from the CEO, Dan Wagner himself. He says, we are defining the indispensable infrastructure for the age of agentic commerce. In other words, he's saying they aren't just another player in the AI game, they are building the very foundation of how we'll buy things in the future. But, that's just one side of the coin. For every big optimistic story, there's a big question mark. And in this case, there's a very loud group casting a pretty dark shadow over that vision. This is where it gets really dramatic. On that same earnings call, the CEO went on the attack. He directly called out what he called anonymous short sellers, accusing them of spreading lies and trying to manipulate the stock. He literally said it was market abuse, shameful, and manipulative. You just don't hear a CEO talk like that every day. The gloves are clearly off. So, for anyone who's not deep in the weeds on this stuff, what is short selling? Well, think of it like this. It's a high-stakes bet against a company. You borrow shares, sell them immediately, and hope the price tanks. If it does, you buy the shares back for cheap, return them, and you get to pocket the difference. It's a direct bet that the bull story is wrong. So what are the bears actually worried about? Well, first off, they keep pointing back to that big 27.7% revenue miss. To them, that's not a stumble, it's a sign the company can't execute. Some analysts are also worried about high leverage, meaning a lot of debt, and profits that are going down, not up. Plus, the AI world is incredibly competitive, and it seems like the big money institutional investors are getting skeptical, with more of them selling off large blocks of shares than buying them. So what you have are these two completely opposite stories. And this has created a deep, deep divide among the market experts. It is almost impossible to get a clear signal right now. And this right here, this just perfectly shows the confusion. You look at one source, like investing.com, and its technical signals are practically yelling strong buy. But then you look over at a report from A-Invest, and it's flashing warning signs, weak technicals, cautious big money, and a recommendation to avoid it. And of course, the company itself is pointing to positive signs of ownership. It is total chaos. So what happens when you have this intense clash between the hype and the skepticism, between the bulls and the bears? Well, it leads us to what Rezolve AI has become right now. Rezolve AI is now a classic battleground stock. This is a stock where you have a huge number of really passionate bulls who believe in the dream, and an equally passionate group of bears who think it's all smoke and mirrors. The result? A fierce tug of war that leads to massive trading volume and wild price swings.
And one of the main battlefields here is the company's valuation. Resolve itself points out that it's trading at about 17 times its recurring revenue. Now, compare that to the average for its AI peers, which can be valued at multiples north of 60, even 70 times their revenue. That's not a small difference, that's a huge chasm. And all of this leaves us with the million-dollar question, right? Is Resolve AI's lower valuation a sign of a massively undervalued, once-in-a-lifetime opportunity just waiting to explode? Or is it a reflection of some very real risk that the bulls are just choosing to ignore? The answer to that question will decide who wins this fight for Resolve's future.